Good morning, everyone. Sorry for the delay this morning. We'll get started here. This is Matt Tour with Insurance Agency Marketing. We're going to be discussing some 401k and IRA rollover options, some good game plans we have available to help move some of those dollars into safer investments. And we'll be having Dave Pimper,
Good
our
morning.
sales specialist, join us here shortly. So,
Can you hear me, Matt?
Yes, I can.
Okay, real good. Yep, I'm on board.
Good. So we'll go ahead and get things rolling here, Dave, and see if we can't get things going here. Thanks for joining us today, of course. And, one thing that IAMS does offer is a way for you to increase your business based on referrals. When you refer other agents to IAMS, you receive a $50 cash bonus. You also receive overrides based on that referral's production. And if you have a referee that does $1 million of annuity premium through IAMS, you would get yourself $2,000 of additional cash in your pocket. So pretty good way for you to build up some nice quarterly checks coming in. I know we pay these quarterly. I have agents that always call me on a quarterly basis asking where their checks are, how much their checks are. So I know it does work out really well. And we see that as a great way for you to expand on your cash flow and also help, of course, help other agents and be able to match their needs through IAMS and be able to help their production out. So definitely something you want to keep in mind. We also have our new producer builder bonus. You can earn different incentives based on production the first 90 days of being contracted. We have 3 different levels of incentives. We have a $500,000 level, a $300,000 level, and a $100,000 level. Great way for you to get some additional incentives based on your production. We've got a great seminar system that Dave Pimper would help guide you through based on a $500,000 level of production. We also have iPads available, cash bonuses, website development, and we also have different mailing systems, including a Social Security mailing system. So that's something you do have interest in receiving. Definitely do some good production the first 90 days of being licensed, and that'll get you on board for that. We have great support through our office. We have a great new business team. They process all your new business through the office here. They catch anything that may be wrong. We get that corrected before it goes in. That really helps the business flow through much easier and more time, efficient way. And that's something you definitely want to take advantage of is our new business team. They also give you status reports on a weekly basis. They're consistently calling home offices, jumping online and checking out the status of the cases online, so we can go ahead and get those passed along to you as a writing agent, and that way there's no unnecessary delays in getting processed issued. And of course, the quicker the policy gets issued, the quicker you get paid as an agent. So I know that's the bottom line, so we make sure we get that taken care of for you. We've got a great department that helps you with advertising. Maybe you want to do an email blast. Maybe you want to develop a website. Maybe you want to redo your stationery. We've got a great creative team here that helps you with all that. They've got a great logo designs. They got business card options. I mean, a lot of information you can take advantage of. And the information, of course, is all free. Of course, if you want to use that and go out and get some cards printed or do a website and, of course, do some other things that's going to definitely cost you a few dollars. But, getting them to do all the tough work, getting all the heavy lifting done, and then all you have to go out is finish that off based on your needs. So definitely give Tasia a call or Josh a call in the creative department. They'd be glad to help you out with that and be able to maximize your needs based on that. We've got a great website we have through IAMS, and it's got a lot of great information on there. If you need quotes, if you need updated interest rates, if you want life insurance information, everything is on the website itself. We've got our current company ratings. We've got different annuity software you could take advantage of. Maybe you want to do a income comparison, or maybe you want to look up an AM Best report on a specific company. All that can be done through our website. We've got some great industry links in there. Maybe you want to look up some tax information, some state insurance department information. Everything is available on our website. So definitely get on there and take a look if you have not done that as of yet. A great tool you can use and maximize your usage of time by using our website. So really some good information to take advantage of. We continue to offer a retirement analyzer software program. It's a great tool you can use to give clients presentations. It's got some great printouts you can take advantage of. It's got really colorful information. You can do pie charts, flow charts. I mean, a lot of information you can take advantage of. You can plug in different information based on clients' future needs. Maybe they go into a nursing home. Maybe they have a hospital stay, or maybe they have a situation where their significant other one passes away. You can plug all those details into the software, and it's going to kick out information based on what you put inside the package itself. So definitely take advantage of that. Marcus in our office is a great lead person to go to for the Retirement Analyzer software program. He does a great job with that. He can do some sample quotes for you up front. He can help you guide you through the software if need be. Really a good turnkey system to use it on the retirement program. We've got a great wealth management team here. I know that Charles Hiring Jr. is in charge of the wealth management team. We've got a great group of individuals that work in that office, and I know they've had some great success in getting money through the office, helping get agents started up with the Series 65 and other details. If there's something you have some interest in pursuing, if you want to take a look more of what the wealth management team can do for you, check off yes on the little survey I just kicked out. We'd be glad to have Mike give you a call, Charles give you a call, Joan give you a call. They all three work in that wealth management team. And I know we've seen a really nice increase in business coming through that side of it here recently. Of course, having the stock market jumping up at all-time highs doesn't hurt. When you've got a bull market, of course, that definitely helps as it compares to a bear market. So if that's something you have interest in pursuing, just check off yes on the survey I just kicked out there. We'd be glad to get things going for you. And hopefully we can help you out in getting things started on the security side of the business. I know that Dave works a lot in that side of the market. He's got some great ideas on that side also. So if that's something you want to take a class with Dave, something you want to pursue on that end, he'd be more than happy to help you out with that. I'm going to leave this open for about another 20 seconds. Again, if you do want to pursue the security side of the business through IAMS, we help you with your Series 65. We've got a great broker-dealer you can work with Carlton and Associates, and we have some great opportunities on that security side of the business you can take full advantage of. So definitely mark yes on that if something you do have some interest in. Go ahead and close that poll up there. We'll go ahead and get to the next slide. We do also offer a 2-day Annuity Academy, and then we just held one about 2 weeks ago. We have a great staff that comes in, get some great presentations, really a good system we've put out there. And I know we typically bring in between 35 to 40 producers that attend our meetings. That's something you have some interest in looking at down the road. I know we'll probably do another one coming up in March or April of 2018. It's an all-expense paid trip. We take care of your flights. We take care of your driving reimbursement. We take care of your hotel stay. All your food and drink is all taken care of. Got some great speakers that come in. We have some of our top producing agents that will give you some presentations on what they use in the field to maximize their production. They'll have good information on advertising, ways to get in front of more clients. Really some good information that you'll pick up at these academies. If that's something you have interest in, we typically do between 3 and 4 of these a year. We'll typically do them in March, June, and September. And we might add a couple more in based on the year itself. But if something you have some interest in, we typically hold these in Omaha, Nebraska, or Des Moines, Iowa. And we got some great opportunities for you to pick up valuable details from other agents also that you meet at the meeting. They can give you some prospecting tools they use. Maybe they use a lead service that's been working out really well for them. you can always pick up additional sales ideas from these other agents, and a great way to, continue your building of your clients and be able to maximize your time and effort when you spend at these meetings. And it should be a great opportunity for you to move forward based on that. I'm going to go ahead and close up this survey real quick. But if that's something you have some interest in, we do go over a lot of annuity details, life insurance. We'll go over some wealth management ideas, some sales software. We'll also have some high-end life product information. And we also bring in a number of different companies. We'll come in and present some of their programs, what they specialize in, ways to get clients the best returns you can. Some really good information we get from these carriers also. So make sure you do attend one of those at your leisure. We do continue to offer our trips. This next year's trip is going to be to the Boulders, a very nice location there in Scottsdale, Arizona. Takes 2 million points to qualify. It's our marketing summit meeting. We typically mix in a round of golf. We have some great dinners, some good places we go to. And if you want to go hiking, horseback riding, a lot of different outdoor activities you can take advantage of there. In Scottsdale, it's a 4-day, 3-night trip. It's got a great view. It's got great weather when you can be down there in the end of February. So that's something you have some interest in attending. You do have another month to qualify. If you're right on the edge, you do have another month to qualify for that great trip. So hoping to get things taken care of on that question, on that situation there. I'm going to go ahead and bring in Dave. Dave, good morning, sir.
Good morning.
And I'm going to go ahead and give controls to you. I'm sure you have the slides on your computer there.
Well, I did.
Okay. Did I put the jinx on you?
Well, you know what? Hold on here. I don't know why. Well, hold on here.
Okay. But Dave's been in the business for many years. He's really done a great job on both the security side and the insurance side, so he's a really good go-to for any coaching you may need on either side. He's got some great sales ideas, some great packages he's put together for one-on-one presentations, some good seminar systems, so Dave does a great job on that end.
Yeah, you have to talk for a little bit as I get on in here. For some reason, I got knocked out, but I'm getting back in here shortly.
Getting back in, all right. So that's good news. And Dave always attends our meetings we have. He's one of our key presenters. He goes over some great sales ideas. He's done a lot of recent seminars in the 401k market. He's got some great ideas on getting money moved out of the individual's 401k into annuities, into different investment options. So he'll be going over that with you here today. And also in person, if you do attend one of our annuity academies, Dave will be definitely on hand for those. And he'll be able to get some great information in your hands based on those needs. If you do have any questions along the way, you can always get those asked. We'll go ahead and get those answered as we're working through the presentation this morning. And that way we can help you out with anything you may have further questions on. Maybe you have some ideas we'd like to present during the meeting itself. We'd be glad to get that done.
What I'm going to do, Matt,
sure.
For some reason, for some reason, I'm back to the original screen. Are you showing your screen as the first slide?
Yeah, I'm showing the IAMS 401k IRA Rollover Retirement Seminar screen.
Yeah. Okay, so can you go to the next slide?
I don't have. Let me see if I have the slides on here. Let me look. Let me take a look here real quick. Let me take over the presentation again.
Okay. All right. And then we'll get going on 401k. Thank you, everybody, for coming in. We got a lot of folks after Thanksgiving, at the Thanksgiving holiday.
I got it right here, Dave.
Okay, good. And then we'll see if we can go in and get that to me. But we're going to talk about 401ks, IRAs. We're going to talk about seminar marketing a little bit. Not for everyone, but I will tell you right now, seminar marketing is a fit I always say it's like Cinderella's shoe. If it fits, it can fit really, really well. And I just met with a wholesaler in our business. Wholesalers, folks coming out and talking to the people within the industry, and he just said it's amazing of how few agents and brokers are going in and marketing their practice. And so if there's any questions, certainly bring those up today. Matt, I'm having trouble just
I'll go ahead and
slide.
flip through the slides for you, Dave.
Okay, so let's go to the next slide. So this is my seminar put together. It's only going to be about maybe half or 2/3 of the slides, so we can get this done in the next 30 minutes or so. But if you think you know a lot about 401ks and IRAs, you may be kidding yourself, because there's a lot of information that people don't know. So I'm just going to go ahead with those 4 or 5 questions, and let's take a little quiz here of what you know about the retirement rollover, the IRA marketplace. So say you make your initial Roth IRA contributions for the 2015 tax year. You make it on April 15th of the next year, which you can. How many years do you have to wait to withdraw your money, or all of it out, all tax-free? So the earnings is tax-free and the growth is tax-free. And you're quick on the draw there, Matt, but everyone says 5 years, but it's only 3 years, 8.5 months. Why? Because every bit of Roth IRA money, not conversions, but Roth IRA money that you put in, goes back to the date of January 1 of the year that you're taking it for. So if you put in January 2nd, it's 5 years minus a day. If you put in February 1, it's 5 years minus a month. Yeah, interesting. 3 years, 8.5 months is on this example. Okay, question number two. And be patient, Matt.
I will be patient this time.
Yes. What type of trust do you have to establish for your IRA when your intent is to make sure the designated or the human beneficiaries within that trust are able to stretch out the tax deferral for their lifetime? So we're talking about an inherited IRA. What kind of trust? So think about it. Write it down. What kind of trust do you have to have? A lot of people put living trust. It'd have to be a specific type of trust. Okay, what's the answer, Matt? It's a see-through trust, or a look-through trust. You're looking through or seeing through to the human beneficiary with the heartbeat. It's a type of a conduit trust. Many trusts aren't set up this way, and it knocks out the inheritance or the inherited IRA option. Question number 3. This is a tricky one. What type of trust do you have to establish for your non-IRA, non-qualified, with an annuity when your intent is to make sure the designated human beneficiaries on that annuity within the trust are able to stretch or do an inherited benefit out of that tax deferral? And you know why this is a trick question?
Why is that?
The answer is, Matt, can't be accomplished. Can't do it unless you can't inherit a beneficiary, use it unless it's an IRA. Or some type of qualified retirement plan. This is non-qualified, it won't work. Question number 4. What does the designation of per stirpes mean pertaining to beneficiaries? Per stirpes. There's per capita and per stirpes. Per capita means per head, per individual. Per stirpes means by the bloodline, or you hear it by the branch or by the roots. Okay? Yeah, what happens here is that if you didn't change beneficiaries and it's on a per capita, and say you got two children, one of the children die, you haven't changed the beneficiary, all of the money would go to the other one. Here, half of the money would go down through the children, not the spouse, but through the bloodline, which a lot of people like that idea of keeping it in the family.
That's always a good idea if I'm involved.
Yeah, that's exactly right. I agree wholeheartedly. But you know what happens is that there's a lot of, go ahead and go to the next slide, Matt. But there's a lot of questions like that maybe you don't know the answer. But when you take the training from me, which is coaching for 5 sessions, and we're doing that with the seminar, which we're booking in all of our January seminars right now. We're past December. December's a tougher month for seminars anyway. January, February, March, April are just great months. After the first of the year, people are making New Year's resolutions. And if you don't think seminars work, then you're kidding yourself. Why? I mean, just look at some of our top producers. Look at John from Ohio, or Anthony from Kansas City, or some of the bigger producers that we have, Matt.
Yep. Matt Gill.
They're all seminar guys. Yeah, and not everybody of the top producers are seminar people, but seminars are, you've got with just a lot of different people who are top producers, and that top 15-20% are seminar givers, and there's a reason for that. But here's my first slide. We talk about what can you do with your potential rollover options from your 401k, your 403b, your 457 investments. Those aren't exactly the same. They're kind of twin brothers and sisters. Some are fraternal, some are identical. But what happens is that you can do nothing. You can just leave it there. And then I'll have a slide to talk about why would you do nothing and leave it there. You can roll it over to a new company retirement plan. You could take a lump sum distribution. You can convert it to an IRA, to a Roth IRA, or you can roll it over to a traditional. And we make the majority of our money in our business comes from rolling it over into a traditional IRA. Okay? So then what I'll do is I'm going to do this real quickly, but each one of those slides, I go in and I talk about each one, then I dissect it. So why would you do nothing? Well, you want your money to stay in your existing plan. Maybe you're comfortable with it being there. Now, if it's under $5,000 and you're newer in the plan, yeah, they probably will force you to take it out. But if it's over $5,000, most likely you can leave it with that plan. Those are dormant 401ks or dormant 403bs. It's quite common for that to happen. Next slide. So why would you want to leave it in your current 401k? What's interesting, if you're 55 years or over and you do not have employee with your corporate firm anymore, whether you got fired or you got laid off or you retired, but there's called a 55-year rule now. Most people don't know about it, but you think it's 59 and a half. If you take monies out of a retirement plan, a company retirement plan, you have to pay you 10% money, but you don't here. Not at 55. Now 54, 3, 2, 1 earlier you do, but you could take, say you need money for a car. Well, if it's in an IRA and you're 57 years old, you're going to have to pay 10% penalty to take it out, not with a 401k. So it might be worthwhile to keep that money or part of that money in that 401k. Now, right here, the person that you're talking to or advising in the crowd of the seminar, they're probably wondering, gosh, how does Dave Pimper make money if we don't roll it over? Well, we don't make money, but we're giving great advice here. And that's what we're trying to do, is gain the trust of the person by giving really sound financial advice. Other considerations, ERISA, which company plans like 401ks and 403bs fall under, normally have a higher safeguard for protection, for legal protection, for bankruptcy, for lawsuits. But IRAs now are protected most of the time. They've got almost as strong as protection. Might start thinking about, why would I leave it your investments in the 401k? You're just familiar. Doesn't mean it's the best advice, but you're familiar with the investment choices. May offer lower fees or may offer alternative choices. Just an easier choice. No decision has to be made now. Okay? Next slide. Now, another thing you can do with your 401k when it rolls over, if Matt goes into the next slide, but you could take you could roll over to a new company retirement plan. And really all of the things come up to play with your original, leaving it in your original plan. I do have a couple other ones here, but like, your investment choices could be much more varied in your new company plan. Fees might be lower. Service and guidance, you got to think about that. You may not have had your own plan. Maybe you can pay for service and guidance if it's one of the big fund families. Yeah. You want to kind of, while keeping it in a 401k, you have loan provisions with a 401k. You do not have loan provisions in an IRA. A lot of people, when they get older, they like to consolidate funds. Not many, but some will do it, within a 401k structure instead of an IRA structure. Now, taking a lump sum it's interesting, over about 50% of the people who have 401ks do take a lump sum. Can you believe that? A lot of those are smaller ones.
Mm-hmm.
But it's going to be taxed as ordinary income tax, and that normally isn't the best thing. You want to keep deferring that money if you can. But what happens is if you take money out, let's say you got $300,000, and you take that, let's say you have $100,000, you take that out, the government's going to withhold 20%. Federal taxes of 20%. You're only going to get $80,000. Now, that 20% will go to pay for taxes. They don't trust you that you're going to pay your taxes. Yeah.
Those heathens.
Yeah, that's right. Now, you got 60 days to put it back in, but now you got to make it whole, you got to come up with 20 grand out of your pocket. Or if it's 300,000, 60 grand out of your pocket. Well, it's not easy to do. A lot of people don't have that kind of money. Now, a good reason to lump sum distribute would be something called net unrealized appreciation, NUA. So let's go to the next slide. We'll talk about net unrealized appreciation a little bit. So here's what happens. Let's say, just for hypothetically, you got IBM stock and you work for IBM. You have to work for the stock itself. That's the company you have to work for. So you can't be working for IBM and have Microsoft stock. Has to be, if you work for IBM, it's IBM, or Microsoft, Kellogg's. And so let's say that you've got let's say you got 400,000 in your 401k, 300,000 are in mutual funds, and 100,000 is in company stock, worth 100 grand. That IBM stock's worth 100 grand. We've been putting into it for 25, 30 years. The cost basis on that IBM stock is $25,000 bucks, worth 100,000. If you take all of your money out by the end of the year, the mutual fund money rolls over to a fixed indexed annuity or rolls over to a mutual fund or wherever it goes, but the 100,000 rolls into a personal account. And that personal account now holds the IBM stock. You're only going to pay ordinary income tax on 25,000 of it, the cost basis. Any of the gain is now at long-term capital gain rates. If you have a little bit of money, or if it's not highly appreciated, no big deal. If it's highly appreciated or you have quite a bit of money, big deal. You're turning an ordinary income tax bracket to a long-term capital gain bracket of 15 or 20%. What a big deal is that? 20%. What a big deal is that? So that's called net unrealized appreciation. If there's any questions before we go to the next slide, certainly type them on up and I'll be more than happy to answer those for you. Now, knowing a lot about the retirement plan marketplace, it certainly will help you in your practice. And we go through a lot of information. I wrote all the language for those slides. In the seminar setting, we have a YouTube that we're able to go in and to get to the people. And that YouTube is of my presentation. But the 5 coaching sessions, we go over every single slide. We talk about the mailing. We help you through all the demographics, finding the place, and so forth. But what happens is that seminar marketing is not for everyone. It's not. But I will tell you right now that if you can get in front of a grouping of people, 10, 15, 20 people at a time, hopefully you can get 10 or more appointments from the workshop. Seminar marketing is very, very viable in today's day and time of getting in front of a lot of people with one presentation. And we really hone in on the subject. This is not broad-based retirement plan. This is 401ks, 403bs, 457, IRAs, rollovers. Even though we talk about a lot of other things in here, it's specifically around the rollover. So if you would like to have more information from me, if you mark yes on this, then all that will happen is that one of our administrators is going to go in and give you a call, and then we'll just set up a time for 25 minutes that you can pick my brain about how maybe this type of marketing structure could help you in 2018 get off to a fast start and a good start. Matt, is there anything that you want to talk about with specifics around, before we go to the few more slides here, about the retirement plan marketplace and seminar marketing?
Yeah, I mean, we've seen a really nice increase recently in the amount of production from certain agents that have used what Dave's talking about here, going and doing the seminars and doing the follow-up with clients. and be able to get in front of more individuals at one time, we definitely have seen a nice boost in production from those clients. I know Dave's done a great job with us over the years and coaching different agents based on different systems. I know the 401k system's been great. We've seen some nice production from agents that have used this, and I think it'd be definitely worth your time just to spend the initial 25 minutes with Dave and be able to take advantage of what Dave has to offer. Dave's been doing these seminars for years, and in the last year he's had some really nice production from doing the 401ks seminars and being able to get clients when they're coming out of these companies and being able to move blocks of money, between securities and insurance, and being able to maximize those clients' returns going down the road, and really being able to help them out and keeping some of their money in safety, but yet still having some of their money in the market where they're taking advantage of these big returns the market's been doing the last couple of years. So I think these 401k seminars are great. I know Dave's had a great experience the last 2 years in doing these, and I think it'd definitely be worth your time to click off yes and be able to get some additional information on Dave's system and what Dave does, and be able to use his background and move forward from there. And I know that when I went to a American Equity meeting here a couple of years ago, they had their top 10 producers with the company come up and discuss what they use to get in front of clients. 9 out of 10 use seminars. So
Yeah.
they're the ones that are writing millions of dollars of production, and how they're writing 10, 15, $20 million of production is they're doing seminars. They're not doing individual mailings. They're not going out and seeing, people individually per se to start with. What they're doing is these seminars and being able to get in front of 30, 40 people and be able to make appointments with, 10 of them, and be able to make some nice sales with these clients. So
Yeah,
I think
and
the
Matt,
seminar system is great to go with.
yeah, let me just say this. If you can't publicly speak, no, that's trouble.
Mm-hmm.
If you have no money to market, well, no, then you can't. Then you've got to, work your book of business, and you can't cold call anymore unless it's businesses. So you're limited. But if you have some resources, and you're not reinventing the wheel. You've got a set in track to work. Seminar
Mm-hmm.
marketing is very viable, and I've given 465 or so workshops, public workshops since the mid '80s. So I've done this. I've been in the business since 1981. So I've done this for a long, long time. And I noticed around me that people back then, not as many people gave workshops. I mean, the height of seminars were about maybe 5-6 years ago, but because of Department of Labor laws, because of compliance, because of, if you happen to be a registered securities license, those are all FINRA reviewed. I had a FINRA review on this. Didn't have any changes, by the way, when it went up to FINRA. Mm-hmm. But it's a track. It's a track. So we're going to take the slide off here just in a second. But if you'd like to get more information, mark yes, and then Lynn or Amy will give you a call in our office to go in and line up a good time for yourself and myself, and we can talk. Okay?
Well, good.
All right, we're going to turn it off here in the 5 seconds. So if you got any, well, it's actually 3 seconds. Okay. So we want to go into the next slide, Matt.
There we
go. We're going to go through those. Yeah, we're going to go into those pretty quickly here. So we talked about net unrealized appreciation. We'll go into the next slide. So we have probably 5 or 6 different slides like this. They're kind of fun. Experience is a good school, but the fees are high, by Henry Heine. And what happens is that can you do this yourself? Can you roll over yourself? You could, but if you get a pro, get a financial advisor who you trust. Someone who has expertise like myself. That's what I would say. Expertise like myself. We can keep you out of a lot of trouble. What happens is that when you go into my retirement planning, and we'll talk here a little bit about RMDs, required minimum distributions. Well, you know what? If you're late on those, one day late, say you go January 1 instead of December 31st of your last day, and you're supposed to take an RMD out for $10,000, your penalty, your fine is $5,000. Besides paying the whole $10,000 again. You don't want to make a mistake. You don't want to try to do some of this yourself. Okay, we go to the next slide. Now, what I want to do here is I don't want to bore you, but I want to give you an idea. All of those slides have language. Every one of those slides have language. It's language that I've written. It is great information about learning about the topic. So Roth is a tax-free IRA, where a traditional is you get a tax deferral and then pay full ordinary income tax as it's withdrawn out of that shelter. So what happens is there's no deductibility, but there's no age limit. You need earned income, but you can do it at any age. With the traditional IRA at 70.5, it stops. Okay, there's a 5-year hold rule, but we really know it could be as early as a 3-year, 8.5-month rule, right? Yeah, but everybody calls it the 5-year rule. There's no required minimum distribution. So what happens is that if let's say it's the husband and the wife, the man dies, the wife inherits the $100,000 Roth IRA. Does she have to make required minimum distributions after 70.5? No. Now, when she dies and goes to the kids have to take an RMD out, but it's not taxed. And if they inherit it, if it's set up correctly for beneficiaries and it's inherited, then what happens is that you can go on in and take it off of your life expectancy instead of a 5-year rule or off of your mom or dad's life expectancy. Pretty cool. Pretty neat, yeah. Now, there are some income limits, but Roth, we do much more Roth business right now than traditional. Roth Conversion is taking a traditional IRA from going into a Roth IRA. More people do it. Everyone wants to go from taxable to tax-free, except for you got to pay the taxes when you convert it out. Yeah. So we talk about Roth conversion. We go to the next slide. Now, I go longer in depth. I talk about a minute per slide, and I'm going faster now, but recharacterization is the OOPS rule. As long as you do it by October the 15th of the next year, you can go in and just say, hey, I don't want to convert. And there might be reasons for it. It might be that you just don't have the money for the taxes right then for the conversion was going to be. Or your investment went way down in value. 100,000 went down to 50,000. Well, if you go in and recharacterize it, you have to wait 30 days or until January 1 of the next year, whichever is later. But you can do it all over again. Now you're just paying taxes on 50,000 if there was a big decrease in the value. So it gives you flexibility. We go to the next slide. Now, when I'm coaching you through this, I get paid $150 per coaching session, and we coach for 5 sessions. That's $750. But as long as you qualify, you're licensed and you can do business and will through IAMS from the seminar, Insurance Agency Marketing Services, who Matt is one of the oldest people there. Matt, I think you're number 2 right now, aren't you? The oldest people.
I am number
here?
2.
Yeah, by just you and Steve are kind of tied there, but you win the tie on about a month or 2. I know that. So that's how many years have you been with IAMS now?
23 years.
Yeah,
Long
not
time.
very often. Yeah, not very often. The company's been in business. Charles Hiring started that in 1986, 31 years ago.
Right.
And Matt came on. Matt, and you are you're either a CLU or CHFC, aren't you?
CLU.
CLU, yeah.
Right.
So you've got you got certainly some credited background. You've been with the firm a long time. Not often. Well, most FMOs have not been around 23 years.
No.
but Matt's been. Yeah, and you actually worked with another FMO, I think, before that, didn't you?
I did. Worked for another group before this.
Yeah, how many years did you work there?
3 years. I've been in the business for 26 years now.
You know what we call that? We call that a lifer.
That is a lifer.
Yeah, that's cool though. That's neat. But you know, I mean, a person doesn't stay with the firm for that length of time period if that firm's not doing some pretty good things. And I'm not here to promo IAMS, but I'm just saying it's pretty cool that IAMS, they really understand that it's the agent. It's the agent first. That makes you don't get paid if there's not business coming through the books for IAMS.
Exactly.
And so that's why many of the annuity academies, I mean, the majority of the time we're talking about ways to prospect and to market your practice, to get in front of people face to face. So seminars, what happens is that IAMS goes in and pays for, of the $750, IAMS pays for $555 of the coaching. So that's $195. That's your cost for 5 coaching sessions. You can talk to me anytime you want to from there, or even we work the deal out. You can talk to me afterwards as often or as much as you want. And then we help you set the seminar up. And, we're really kind of the back office for your seminars. Okay. So as we kind of continue here, and I'm not in your hierarchy, I'm not in your override, I get paid from the coaching itself.
There you go.
Yep. So indirect rollovers versus direct rollovers. We'll go to the next slide here. You know what happens is that indirect rollovers is what you don't want to do. That's where you get the check made out to you. There's a 60-day time limit. If a customer company plan, 20% will be taken out. You can only do one per every 365 days. So it's just not otherwise all of it's taxed. It's just something you don't want to do. Let's go to the next slide. Direct rollovers, that's custodian to custodian or trustee to trustee. Check is actually be mailed to you as long as it's made out to the new custodian. Big firms like Fidelity, Vanguard, Mass Mutual, they will do that. It actually goes to the client or gets mailed directly to the custodian of their address. But you can do as many as you want to. There's no 20% taken out for company plans. No 60-day rule. I mean, you never touch the money. It's a much, much, much better way to do it. We used to do indirect rollovers all the time 20, 30, 35 years ago, but now almost everything is done with direct transfers. In fact, when I started in the business, the maximum you could put into an IRA was $1,500. $1,500.
That was a long time ago, Dave.
Yeah, 1981, 82, 83. Yeah, so $1,500. What happens now is you can put in $5,500 for the man and the wife, and if you're over 50, you can put an extra $1,000 in. $6,500. You put $13,000 in between the two of you. It's a really, really, really neat benefit. We go to the next slide. Now I'm going to go through pretty quick so I kind of keep things going here, but we talk about IRA direct rollovers and transfers. We can do with existing IRAs or new IRAs. Why? And then we talk about fewer rules in the IRA. There could be less fees. I mean, it's like the fixed indexed annuity. I know it has a cap and nothing to do with the income stream, but I know it has a cap and I know it has surrender charges. But how much is the internal fee on that, on a fixed indexed, if there's no income rider?
Zero.
Well, zero's lower than anything that you'll have in your 401k. I'll just guarantee you. Yeah. How about a fixed annuity? What's the internal fee?
Zero.
Yeah. Have a surrender, have an interest rate, but it's just like a deferred CD, but it's guaranteed by the insurance company. Now, so what happens is there certainly can be advantages of directly rolling that over to a different kind of IRA. One of the things that I've found, Matt, maybe you have too, but one of the things that's lacking in 401ks, lacking in 403bs, 457 government deferred comp plans, is a real competitive guaranteed rate. Have you noticed that with your agents? Yeah.
Yep. Yeah, they don't have the guarantees.
That's right. And the government, even now, they're trying to put in annuities within the 401ks and making it mandatory. And so even that's going to help our business, because I'll tell you, it probably won't be as competitive as when we're out independently shopping 15, 20, 25 different carriers, will it be?
No,
probably won't. Next slide. We talk about beneficiary options, and we go through each one of those. You leave them blank, name the estate or the will, name your spouse if married, why your children, your grandchildren, charity. Don't use a Roth because it's already tax-free, a trust. And then in my real presentation, I go through each one of those. Next slide. It says, I've got all the money I'll ever need if I die by 4 o'clock. Henny Youngman, don't let that happen to you. Do some advanced planning. And the big thing is with the stock market, so bullish those last 9 years, the second longest stock market ever without a 20% bear market coming into being. I know, price to earnings, that's a way to kind of indicate of how expensive a stock is. The S&P has been around 16 times earnings. If it's higher than that, it's expensive. If it's lower than that, it's not. But the S&P is at about 27 times forward earnings right now. Well, what does that mean? It means that stocks are pretty pricey. In fact, out of 38 industrialized nations, only Greece and Ireland, who have both had huge financial problems in the last 5, 6, 7 years, even in default with Greece, are higher PEs than ours. Well, you know what? I tell you, people, you don't want to get into guarantees once the money goes down. You want to get in guarantees. You want to sell high and get into guarantees. It's a really prime time for, and this is what getting in front of 401ks, what you start talking about. Okay, next slide. Don't forget to designate a beneficiary to inherit or to stretch, and we talked about that already, but we have more slides on later on. Next slide. We go in and we talk about how to properly title John Doe Senior IRA when he died for the benefit of Junior or son. There's certain ways to title, properly title. Talks about when it needs to be done by September the 30th of the next year after death. Must start taking RMDs of the year after death also, which is the last day of the year. Figuring RMD amount is different with inherited IRAs slightly than it is for regular IRAs. So that's important to think about. Okay, next slide. I talked about per capita and per stirpes already, and then we talk about transfer on death, TODs, with non-IRA accounts like your bank account, your personal accounts, or joint brokerage accounts for investments. That transfers directly to the person, normally your child, and normally it's used, it bypasses probate. Now, do I spend more time with each one of those slides? I certainly do, but I'm trying to, we're a little bit late starting off today, so I wanted to get through as much information as I could here. We can go to the next slide?
Yep.
Yep.
All right, you want those required beneficiaries up, RMDs up, or you want to go next one?
The next one. Let's go to the next one. We're just kind of rolling through. I just want to show you. So I'm proud to be paying taxes in the U.S. The only thing is I can be just as proud for Half the Money by Arthur Godfrey. Yeah, I remember listening to him when I was a little teeny kid on the radio with my mom and dad eating popcorn. So he was he's an older radio television personality, but people kind of get a kick out of those types of sayings, and they kind of put some humor, some lightheartedness, in a pretty difficult subject that we're talking about. And pretty in-depth. In-service non-hardship withdrawals, we talk about going to a company. Normally it's at 59.5, where you can be working for the company and still take your money out, roll it over into an IRA. I do a lot of money with in-service non-hardship withdrawal plans every single year. Every year. People working for the company, and then we're taking the money on out and rolling it without any kind of 10% penalty. The rules of the in-service, how the specific rules are, we talk about those. We go on the next slide, Matt.
Okay.
And then we're starting to get towards the end of the workshop now. I talk about, if you don't know Social Security, you may not want to have this slide in here, but I do teach, and I have a Social Security workshop also, seminar that I do. But most people say, delay taking your income from your IRAs or 401ks as long as you can. But you have to start taking it 70.5 because of RMDs. But what happens? You might want to start taking money earlier from Social Security. Because where can you get a guaranteed 8%? That's how much you're guaranteed from full retirement age. Say at 66, you're born from 43 to 54. You go in and start taking money out of your retirement plan, because there's not such a thing as a guaranteed 8%. Or a guaranteed 8% in COLA. Next year it's going to be 2%. That's a guaranteed 10%. Well, there's no kind of, I don't care what it is. No one guarantees 10% unless it's fraudulent. But Social Security does. So it's how you work your money. So I throw the slide up to let them know that I have an expertise in Social Security. I can certainly give them a report of when the best time to take their Social Security is. You may not if you don't know that information, but if you don't know Social Security, you should. It's a big income stream for most people. In fact, 60% of the income, 60% of the people in the U.S. rely on Social Security a ton. Like 70% of their income in retirement. I'm going to go to the next slide. So I always say there's a lot to think about here. And so here's what I'll do. I say there's a lot to think about. There's a ton of information we went over. When to maximize how to roll over, how beneficiaries and service transfers, et cetera. We'll go to the next slide. So then I talk about that there's no cost obligation, and I say if you mark yes on this, put your daytime phone number, make it easy for us to get a hold of you because I know we're both busy. You are, we are. There's a time and a date for the next 2 weeks. I blocked it off. So what we do is we get the actual appointment at the workshop. All we're doing the next day is calling them just to verify that it doesn't overlap with another time. There's a special way to do that. Go to the next slide. So here's my promise. So just start rolling through those. Just start marking. Just go down with them, Matt. Click, 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 click. I say leave your checkbook at home. One financial problem uncovered, and then I start naming the reasons they should mark yes. Do you know what your best rollover options are? If you don't, you probably need to mark yes. Has anyone really looked to see whether you could go in and convert money to your best interest? How do I complement my Social Security with the 401k or IRA rollover? Different investment choices. Could that, maybe you're very aggressive in your 401k, or maybe you're very conservative, but there's a happy medium in there. Different choices could have benefit me. Beneficiaries, how about the inherited designation? If you don't know much about that, you maybe want to mark less. And lastly, sometimes a second opinion is the very best opinion. When's the last time you truly had, your financial plan, your investment money, your retirement money looked at from a true independent? And then I want to leave on this, and this is what I do. A little bit slower, though, but I'll say everybody knows George Foreman, right? Famous boxing champ, made a ton of money boxing, heavyweight division. He made a ton of money boxing, but where he made the majority of his net worth? The George Foreman Grill.
There you go.
Yeah, George Foreman Grill. You can Google it, look it up. You know what? The company paid him $136 million upfront check, not counting his overrides on the grill, to use his name on the grill. And then I always end it like this. I say, people get a kick out of it. I say, if your name is not on a grill, then you probably need to mark yes and come in and see me. And people laugh just like that. It kind of keeps them in a good mood. I'll say, hey, we'll pick those sheets up here within the next 4 or 5 minutes after they're filled out, and then we'll have our salads will come out right after that. This is a dinner workshop, and then we have the salad. So that gives you an idea. Just working with someone that has a game plan. So working with someone that's got 460 plus seminars under his belt. Am I perfect? No, I'm not. I mean, there's, seminar system's not perfect. The seminar business is not perfect, but you learn a lot about 401ks, IRAs, Roth conversions, in-service transfers, a little about Social Security. You learn a lot about beneficiaries. This is a very good broad base. So it's the gears around the rollover money. And we have about 30 attachments, all of our information for that we mail out to people. We have articles. So we talk about qualified longevity annuity, a QLAC contract. Though I don't think they're probably the best investment, it does gain a lot of attention for people to mark yes. And once in a while it will be a fit. But we do a lot of, this is a very much of an informational advice seminar. And it's not product driven, but it's a turnkey system with myself walking you through every single step. Next slide. If we've got another slide, I think we do. And I'll leave it on this. It says, procrastination is my sin. It brings me constant sorrow. I really shouldn't practice it. Perhaps I'll stop. Never comes, does it? If you heard something today that you like, heard something today that I think it might elevate your business, or at least you want to get some information, then hopefully you marked yes. Hopefully we can talk. I have leave it with this. I have a man cave downstairs, and my boy's 26 years old, and we'll be down there, and my wife brought me a sign, and the sign says free. She got it from an antique place. It says free beer tomorrow. Well, it never comes.
I like it.
It never comes. I like it too. Don't let that. If you heard something today, then we should talk. We should talk about seminar marketing. It's not for everyone, but if the shoe fits, it fits very, very well. So my name is Dave Pimper with Lazarus Coaching. I coach specifically for insurance agency marketing services, Matt's firm, and I'd love to talk with you about maybe how seminar marketing, specifically around the retirement marketplace, 401k rollovers, IRA rollovers, could help you.
Appreciate your time this morning, Dave, and I know we've gone through the slides, and we'll be contacting everyone after this meeting, going through and calling all the attendees, and verifying if you do have interest in doing some more follow-up with Dave, and then I'll give you, I'll pass your name on to Dave, and then we'll go from there. But I do appreciate Mr. Pemper's time this morning. We appreciate you being on with us. And if anybody has any questions, my name is Matt Tour, and you can give me a call on the toll-free number at 800-255-5055. I will be in for most of today and tomorrow, so if you have further questions on what we covered today, be sure to give me a call, and I'll go ahead and get your name passed on to Dave. Anything you want to finalize up with here, Dave?
No, I appreciate. We had a lot of people today. I just appreciate everybody taking the time. Hopefully burn off some of those Thanksgiving Turkey Day calories. But I will end on this. I'm in this business since 1981, and the people who I coach, the people who I see that are the most successful, they're the people that take action. They're the people that don't stand for the status quo. They're doing the things that work, but they're also bringing new marketing ideas in their practice. Maybe this is a marketing idea that can help you. So hopefully we'll talk, and I can give you some ideas and see if there could be a fit for you to increase that production for 2018.
Well, sounds great. Everyone have a great week. Appreciate your time this morning, and we'll talk to everyone soon.
Okay, thanks, everybody.
All right. Bye now.
Bye-bye.